Hi everyone, welcome back to Be Rich. As we did yesterday, we spoke about the banking sector and we are looking at opportunities in the banking sector. Today, I wanted to talk about another two companies in another sector, that is communications, telecommunications in the US. There are two very famous companies in the US when it comes to communications. They're the giants of communications in the US. They've been there for a very long time. Both of them are looking at value today, and are these companies we should be considering? Is communications still relevant the way it is? Or is it, thanks to AI and all the other satellite communications like Starlink, is it going through a major revolution? And we should wait and watch before we dive into these companies. And I would love to hear your opinion about that. The two companies which I want to talk about is Verizon and AT&T. Let's first see what they did in the quarters and how they've done in terms of performance in the recent segments in terms of revenue. Then we will see in terms of discounted cash flow like yesterday where their values are. At the end of the video, we'll see if they're at value or fairly priced. Then I'll ask you for your opinion if you should be having these two companies on your list or not. Quarter one for Verizon, that is, they've done fairly well. They're up 15% at $33.5 billion year on year, and their EPS stands at 1.19. The net income is at $15 billion, and the free cash flow, they stand at $3.6 billion, up 34% from year on year. Most of the revenues come from the wireless service, and that is up by 2% year on year at $20.8 billion. And the EBITDA is the best ever they have had, which is at $12.6 billion. The segments which they're mainly working on is consumer, which is up in revenue at 2.2, and business segment is down 1.2 in terms of revenue year on year. And broadband, they managed to add 339,000 accounts, and postpaid, they've lost around 286,000 subscribers. So in broadband, they've gained. In postpaid mobile services, they've lost. The same free cash flow, if you look at it, $3.6 billion, is up from the quarter, the same time comparing it to last year. Debt to equity is at 1.4, which is manageable because their interest coverage ratio stands at 5 times, which is very good. What are the red flags? Well, debt, they've been reducing. If you see from the previous years, Verizon has been working well to reduce their debt, but the debt is still there. So that is a red flag, considering the interest rate cycle the Americans are in. And of course, the loss of subscribers, if you see in postpaid, that is of major concern. In terms of PE ratio, they're at 10.3, and their PEG is at 4.3, which is a little higher than we would like it to be as value investors. Price to book is at 1.8, showing confidence from investors in the company. And the dividend payout is at 6.26%. They've been performing very well over the last decade. Finally, are they attractive? Yes, at this kind of price, at these kind of numbers, they are attractive. But how do they fare against AT&T? AT&T, at the same time, the first quarter, their revenues are up by 2%. Their price to earnings at 0.51. Their net income is at $4.4 billion, improved from the last. But they have increased their subscriber base in postpaid, where Verizon has lost 289,000 subscribers they lost, but AT&T has added on another 324,000 subscribers in their postpaid, while they've also increased in the broadband by 261 in their fiber net. Free cash flow for the same for the quarter, they stand at $4.7 billion. The interesting thing about AT&T is they have a share buyback approved by the board at $10 billion, out of which $3 billion they plan to enact by the year end. That is something to keep an eye on. Free cash flow, if you compare from last year to this year, that is the financial year of 2023 to 2024, they're down by 9.5%. And the debt to equity is also high because their debt is high. But the interest coverage is something we're not able to really see. What are the red flags in AT&T compared to Verizon? High debt, of course, much higher than Verizon. And of course, the declining cash flow is something of concern. But the PE ratio is much higher here at 16.17. The PEG ratio is lower at 1.1, which says it's reasonable compared to where the growth is. Price to book is also reasonable at 1.94, showing investor confidence. The dividend yield is lower at 4.08, but they are also considered to be reasonable and fairly priced looking at these metrics. If we see the price of Verizon per share, it's at $43 a share, and the discounted cash flow has put them at 41. But the relative value of the company is at 74. The average of both give an intrinsic value of 57, which is much higher than 43 where they're sitting on. But if you look at the historical average, they've always been trading in the last 5 years lower than that. That is something to keep in mind. AT&T, meanwhile, their current price is at $27, discounted cash flows at 28, and the relative values at 37, putting the intrinsic value of AT&T at 32.5, which is also much higher than their current price at 27. But the same thing holds true for them. That the last 5 years they've been trading at a historical average much lower, and right now the prices are much higher compared to the historical averages, though looking at an intrinsic value, we can see value at both of them. The revenue's been very stable for Verizon. If you see from 2021 to 2025, the revenue has been stable, while the earnings have slightly declined from 2021 to 2025. The problem in AT&T is from 2021 to 2025, the revenues have declined and the earnings have declined. So this begs the question, should you be looking at both these companies, considering what is all happening in terms of technology, in terms of AI, in terms of communication with these two companies? Are they making enough investments? Are they looking future-proof going forward? Are their moats protected? Of course, both of them are very large brands in the US. They've been for a very long time, especially AT&T. But going forward, what do you think is a roadmap for both these companies? And if you do have confidence in these companies, do you think the price which they are at and the relative value which I'm talking about and the discounted cash flow values and the intrinsic values, does it make sense entering these stocks at these prices? If you had bought them before, let me know what prices you thought of considering them before. And if you have never looked at these two companies, are you considering them now? Are they on your watch list? What is your idea now? Or do you think there's a competitor in the market who can really give a run for their money? I'd love to hear all your thoughts about this and in the communication sector. So thanks for watching the video today. I hope you found it informative and entertaining, and you managed to have a lovely weekend as I'm having here in Singapore. I hope you managed to rest and recuperate and recharge. This coming week I should be back in India, and I should be heading towards the studio and giving videos from the studio with relatively better audio and video quality, hopefully. Thanks for watching me on Be Rich today. I wish you all the best and a wonderful week ahead, and may it be productive. And do remember, there are 5 more days of opportunities to invest in the market in whatever tiffin coffee range you see fit. Thanks for being with me on Be Rich today, and good night.